Welcome to another episode of the Mike Smith Investment Show. Today we're going to be discussing NU stock, the reason why it dipped last week, and whether you guys should buy the dip. So to begin, NU reported a negative earnings surprise for their earnings and a positive earnings surprise for their revenue on Thursday 20th. Last week, they experienced a large sell-off here of a lot of panic sells. Like I've discussed, the market's really full with a lot of short-term investors now, so a lot of people were just kind of benefiting from the short-term bullish uptrend and trying to make a profit. Alright, so to begin, I did make a video on the NU analysis, which I'll pop up on the top right, but just a little bit of an overlook. NU operates in the fintech industry. It's a banking company, and they have no physical branch locations. They primarily operate in Latin America. So if you want to learn more about the company, I would click on that video and kind of overview the in-depth analysis I did on the company. They have no debt. Well, they have little debt, but their cash flows and cash and equivalents can totally cover that. I really like a company that has really little to no debt. Paycom, another one analysis that I did on the channel, also has no debt. It's just always good for a company to have no debt. You know, they're somewhat secure financially. A company like Apple does have a lot of debt and can't fully cover it, but such a big company like that usually does start to accumulate debt over time. Just to really reinvest in the company and make it stronger. So their revenue was a surprise of $230 million, 8.34% surprise. Their estimate was at $2.76 billion, and their actual was at $2.99 billion. So really like to see that. Their earnings was a negative 0.01 surprise, a 5.19% decrease from their estimate of 0.12 and their actual of 0.11, so a 0.01 decrease. Nothing too huge to worry about. The primary reason for this is their net income was rising a lot heavily than the number of outstanding shares that they issued for last quarter. Nothing to worry about, though. They're still a relatively new company. They came out of their inception point around 2022 to 2023, so they're still trying to dial in these numbers. A company like Apple, for example, does a really good job at having good earnings per shares for each of their quarters. And I think over time, NU will start to develop this and get this better to try to increase the stock. The EPS is a very looked after metric, and a lot of investors like to see it. For me, it's important, but nothing too much to worry about. I really like to look more at the fundamental side of the company. They have no dividends. They may start to implement this in the future, but like I said, they just came out of their inception point in 2023. They're kind of a new company, been operating for around 5 years, I believe. So they will, I believe, start to develop dividends, and they do have a share buyback program that they are currently starting to develop and grow. So David Velez, the founder and CEO, wrote this speech about the company. They had a great quarter, a great year. NU added 4.5 million new customers during the quarter, increase of 20.4 million, and reaching a total of 114.2 million customers. That's huge for the company. Their net income reached 55.26 million compared to the 360.9 million in quarter 4 2023, so around a 200 million increase from 2023 to 2024. So revenue increased around 24%. In quarter 4 2023, increased around 66%. This could suggest maybe a little bit of a slowdown in revenue, but nothing to worry about because they're increasing their customers and really growing the company. The gross profit increased around 46%, and their net income increased 200 million from 2023 to 2024. So some of their operating expenses increased. Nothing to worry about though. This company's starting to grow, so obviously they're going to start accumulating some more expenses. But the positive was in quarter four 2024, their expenses were only 20% of their revenue, as compared to quarter four 2023, which was 24%. So they're increasing their revenue a lot more than their expenses, which is always a great thing to see. So yeah, right here, they slightly increased their weighted average number of outstanding shares, but like I just showed, their net income increased a lot greater than their number of outstanding shares that they issued for 2024 as compared to 2023. So that kind of brought down the earnings per share a little bit, but nothing to worry about. This company is definitely going to start to grow their earnings per share as they become a more stronger company. So for their cash flows, this is definitely something I really like to look at. I value a company based on the discounted cash flow model, but their increase in cash and cash equivalents increased around 1 million. They've done a great job at keeping that free cash flow increasing year after year, even through or before the inception point. So that's really a attractive metric I like to look at for the company. If we take a deeper dive into some of the economic metrics for Brazil, as they primarily operate out of, the inflation rate did decrease around 0.2% from 2023 to 2024. They are currently dealing with a little bit of a rise in inflation, but nothing to worry about too much. Their GDP did increase. They had a pretty significant decrease here from 2011 to 2020, but they've been able to start to grow that GDP up to now 2.17 trillion in 2023. So for the economy, they're somewhat strong. It's definitely important to look at some of the other economic metrics in Mexico and Colombia, the other regions they operate out of. But overall, Brazil is somewhat strong. Their political system's a little unstable. I explained that in the analysis for NU in my previous video, but they haven't seen really any issues I've seen from the fundamental side. So overall, I think that this company will be able to regrow. They have no debt. Their fundamentals are super strong. They have great market penetration. The primary banks that operate in their region do not operate in the fintech industry, so they're kind of a newer bank. They offer lower fees than those other banks, and kind of targeting that younger crowd, which will slowly grow into the new primary generation. Yeah, so overall, I think buying the dip is not really a bad idea. I would definitely do your own research, though. But fundamentally, for 2023 to 2024 and this quarter, they were very strong. The only upset was that slight decrease in earnings per share. So thank you guys for watching. I hope you liked the video, and have a good day.